if you think we're over-exaggerating, let's just quickly bring up the stock market at the moment, what the Dow Jones is doing, and you can see exactly. We're now off some 6%, 6.3%, down 1,500 points. Well, emergency measures can help start a struggling economy. And those economic levers, if you will, can help get the engines of growth running again. All this, to some extent, is traditional economics. First of all, you have the lever of monetary policy. Pull that lever. Well, you've already had emergency interest rate cuts from the Fed and the Bank of England, both of which lowered rates by half a point. Quantitative easing is potentially on the cards. The ECB will discuss this tomorrow. Then you have the lever which can be pulled, which of course is what everybody's saying is fiscal stimulus. And that would boost government spending. It would give tax cuts for workers and corporations and put more money in the hands of consumers. That, of course, is what we were just talking about with Caitlin just a second ago. So as terms of stimulating the economy, they are the two big ones. But you also want the government to perhaps pull the lever of private sector help. Emergency aid for industries worse hit by the virus. You're talking about the airline, the cruise industries, hospitality, all under threat, and expand the paid leave for sick or quarantine workers. Remember, in many countries, this will be part of the national social services structure. Here in the United States, you take your paid leave out of your leave, and there's no paid leave in many, many cases per se. Ethan Harris is head of global economic research at the Bank of America Securities. He joins me now from New York. Ethan, very good to see you, sir. We seem to have entered a new stage of this crisis today.
Yeah, I think as you said, the problem right now is we're talking about a bunch of policies that don't address the immediate problem. And what you need is exactly what you're describing, stuff that directly addresses the people who may not be able to go to work due to the virus. But another thing which you didn't mention, which I would add to the list, is supporting people who don't have health insurance and making it clear that they do not have to pay out of pocket to be tested and treated for the coronavirus, because this is the big hole in the US healthcare system where you have all these uninsured people and you cannot get the coronavirus under control if you can't find the people that have the virus, test them, and then give them treatment. If they're hiding in their home or continuing to go to work because they think they're going to lose their paycheck, you're just going to persist the virus. So I think the best thing for the markets right now would be to refocus the whole policy debate on the immediate issue at hand and show that we're serious about fighting the crisis.
It's uncertainty about earnings that's causing a lot of this danger. Companies warning, you simply can't price stocks at the moment in terms of what their forward guidance is. But I'm just looking here. Boeing has said it's confirmed that companies drawing down the remaining amount of $13 billion bank facilities. It had already taken $7.5 billion. Boeing is dragging the Dow down today. But until we get any form of clear transparency on all of this, Boeing down 17% today. This is devastating. This is catastrophic for the markets.
Yeah, I think you're absolutely right. The uncertainty is killing the markets right now. People want to have a sense that they know where the bottom is here in terms of the negative impacts to the economy. So getting going on addressing the virus, getting statistics out there that we can believe that suggest it's getting under control, adopting policies that are directed at the real problem. Because until you do that, you have all this headline problem for the markets where you've got rising cases, you've got companies reporting negative effects, you've got people reporting that they're sending everyone to work from home.
Right.
That headline risk will continue until you address the crisis and get it under control.
This is somewhat academic, but it's worth talking about in the sense, will the US skirt a recession? We're all obsessed by it. I'm not sure why it matters in the sense that if you grow by 0.1, it's the same as losing by 0.1. It's a very small difference. Yeah. But we are obsessed by this. Do you think we will see, whether technical or otherwise, 2 quarters of negative GDP in the US?
Well, we think we'll be close, but we're saying we don't get an official recession. But as you said, that's kind of irrelevant. The reality is that we're likely to get two very weak, either small positive or negative quarters in the second and third quarter. That should be seen in Europe as well as the U.S. So whether you call it a recession or not is semantic. The reality is it's a very weak economy.
You seem to suggest that just then, and maybe you were being kind, that Europe might skirt the recession. Most others seem to say are pricing in a short but nasty recession in the Eurozone.
Yeah, I think so. I think that's right. There'll be enough negative quarters to call it a recession. The U.S. it's a little harder to get there because we're coming from a pretty strong economy coming into the year. But for Europe, it was tilting on the edge there. So I think that's right. This will be a official recession in Europe.
Good to see you, sir. We should talk on more pleasant circumstances. Just